Hey everyone, Josh Fulmer here. Thanks for tuning into this May 2023 fertilizer market update. Going to jump right in and start off talking about ammonia here. So global ammonia values continue to decline as supply appears to be abundant. The May Tampa ammonia contract settled at $380 a metric ton, which is approximately $345 per short ton. Midwest terminal values sit around $200 higher than that Tampa value, currently around $535 per ton and continuing to slide. Looking at the prior 4 years of ammonia trends from this point in the year up through side dress, there's no example where the price has risen during that time. The general consensus is that the pre-plant ammonia volumes have been average at best. There's nothing compelling at this point to encourage sticking your neck out and buying ammonia until it's absolutely necessary. The main reason why ammonia prices continue to slide is due to lower input costs. So US natural gas prices continue to hover around that $2 per MMBTU range. That's cheap. Crude oil prices have steadily declined over the past year, but there's still sufficient US domestic oil drilling activity. Natural gas in many cases is seen as a byproduct of the oil drilling process. The alternative to selling the gas is merely to flare it off, so oil producers are at least getting something for their natural gas. The front month Dutch TTF pricing has also continued to slide. Throughout parts of Europe, though, it's still cheaper to import ammonia than it is to produce it. European gas prices have essentially determined the floor for ammonia pricing throughout the world. And the longer European plants remain curtailed, the more likely there are to be issues when those European nitrogen plants do restart. We've seen multiple examples of this throughout Q1 and Q2 as plants have attempted to come back online. So the last two charts were pretty bearish in nature in relations to nitrogen pricing. Over the past 8 months, nat gas pricing has generally been in a decline. Those charts showed a falling global nitrogen cost curve. It's continued to get cheaper to produce nitrogen throughout the world. This chart, on the other hand, is a more bullish look. So it looks at the US nitrogen content trade balance. That's nitrogen content, not necessarily the finished good tons, but what that does is allow us to look across multiple products and just see where the US stands relative to historical nitrogen content. And so the US trade balance, which is how much we import less how much we export, continues to widen against our historical average. We are 1.5 million tons of nitrogen content behind average. So on a finished good basis, that is a lot of tons that we have not made up through additional domestic production. So in other words, we are behind in terms of the overall amount of product that we have available for sale. Looking at urea, the US urea market saw a short squeeze happen in the month of April. So when demand kicked in, buyers moved in and swooped up the available tonnage. This led to prices surging $150 a short ton in Nola. That is a 50% price increase in less than a month. So urea is definitely a volatile commodity. And while it's the most widely traded fertilizer commodity in the world, it still behaves erratically. Think about this. How many other commodities do you know where the price can swing by 50% in a single month? I have trouble thinking of any other fertilizer or any commodity in general that does anything like that. And so it just is the wild nature of urea. So here's an old favorite chart. I want to point out how urea prices in March and April dropped all the way down to that long-term demand zone, that blue box. That provided support to the market. And then once demand kicked in, prices surged up to the long-term trend line, which is that black line running through there. And it found it as the resistance point, stopping the price at $450 a short ton in NOLA. So right now, though, if you look at prompt pricing and then if you move forward even ahead into June and into the futures market, prices are down there again in the low 300s. So they're touching that long-term demand zone again. Looking upriver, though, the pricing spread between NOLA and Cincinnati is right in line with both the 2020 to 2022 average and the seasonal exponential average. So it's worth pointing out that the spread between NOLA and upriver locations will continue to widen all the way through side dress. At least it has historically, and we would expect that this year would also be the same. Looking at UAN prices remained pretty range bound, and it's been that case for the last 2.5, 3 months. And so it's been that way for a while. And so UAN is behaving differently than ammonia, which is on the cold side. It's reacting differently than urea, which is acting on the hot side. And so it's been traded in the same $15 price range for 3+ months. Popping this chart back up, it shows two demand zones. So prices recently came down to the floor of the 2021 to 2023 demand zone, and they've stayed in that region. One trend that we've seen across all fertilizer products this spring is just-in-time buying. So this was particularly true of dry phosphates, potash, and AMS demand this spring. And when that demand did kick in, the price of those products typically popped, and occasionally there were regional spot outages, or at least tight supply at a minimum. So the question is UAN the next product to experience that? Much of that's going to depend on how warm it gets and the amount of heat between planting and side dress application. So how quickly are we going to need to side dress? And that's going to help determine how quickly are we going to need that UAN and how quickly can resupply happen in a variety of markets. The barter rates on UAN would indicate that it's still relatively cheap compared to historical barter rates. So as many areas wrap up planting and start to look ahead towards corn side dress, it's a great time to think about how to get the most yield gain out of your side dress application. One product to consider in your fertility program is the Anderson's Ultramate LQ. Ultramate LQ is a 12% sulfonated potassium humate liquid. That's a mouthful. Basically, it's humic and fulvic acid that gets added to your liquid products. So here's the exciting part. In a third-party field trial, 1 gallon of Ultramate LQ added to UAN at side dress resulted in a 23.8 bushel per acre yield gain. That's some big money, baby. So contact your Anderson's territory manager today to learn about how to incorporate Ultramate LQ into your fertility program. Wrapping it up on nitrogen, here is a chart that looks at the premium for upgrades. So remember, we hold the price of ammonia steady, and then look at what the premium is for any upgraded products, urea and UAN in this case. And so urea's premium to ammonia has surged, and UAN has also gotten more expensive. Basically, the price of ammonia has softened a little bit, UAN's held steady, and the price of urea has gone up substantially, as we discussed. And so UAN, even though it's gotten more expensive, it's still sitting in that historical premium zone, that blue box that I put in there. And so nothing necessarily to be concerned about, nor necessarily is there a lot of talk about switching from UAN to ammonia for side dress. Moving on to sulfur products, the Tampa quarterly sulfur contract recently settled at $103 a long ton. That's down $27 a long ton from the prior quarter. As has been pointed out in prior updates, the quarterly contract seems to just settle at whatever the spot price is at the time. So pretty sophisticated, right? All the blue circles indicate the spot price at the time that the quarterly contract settles. You can see how that trend plays out. So looking at ammonium sulfate, after 9 months of price declines, ammonium sulfate prices have finally reversed direction. There are reports of multiple regional spot outages and tight resupply availability. Ammonium thiosulfate pricing has also begun to firm in the Eastern Corn Belt. Western Corn Belt pricing has not seen the same level of firmness, so keep in mind that all ATS consumed in the U.S. is also produced in the U.S. We don't import any of it, and the majority of that production of ATS sits in the Western Corn Belt. So a product that might normally shift from west to east out of season typically doesn't move as quickly in season, and this can create an east-west pricing divide, as we're seeing potentially going on right now. Transitioning to dry phosphates, MAP and DAP have had a lively month. The reduced supply availability that I talked about in prior months came to light in April as demand kicked in. Product supply became extremely tight and barge prices were bid up. So depending on the region, some areas are now done with fertilizer applications, dry fertilizer applications. Some are just wrapping it up, and some still have quite a bit of ground to cover. Either way, Nola barges are now too far away for the product to make its way into the field for spring. And so Nola prices are resetting, moving below $500 a short ton. Throughout April, the U.S. was easily the most expensive MAP market in the world. So that is the blue line in this chart. And what you can see is as we have moved into May, as Nola barges become too far away for field applications, the price is starting to reset in line with international values. So just a reminder that it makes sense to end the season completely empty, as the projected price reset, as seen here in Nola, is expected to be pretty steep. So while Nola barges have already started to reset, upriver prices have not yet reset. Demand is still occurring, product is still tight. And yes, the spring application window will come to a close in May, but it still hasn't in many regions. And so for now, there's still value in utility in owning product. And as a result, prices continue to be in this elevated price range. Looking at row starters, they have generally been pretty steady in price all season long. Not a lot of movement there. Looks like almost like a flat line. Prices have started to ease a little bit over the last month. What I'll say is that remaining inventories are starting to get a little bit thin. So if you think there are remaining needs for the spring, you're likely want to get your name on the remaining product. Finally, going to wrap up with potash. After a year of consistent price declines, potash prices have finally reversed trend. And so, in fact, if you look over the last month or so, potash prices have now exceeded the winter fill values. So, in many cases, $20, $30 above fill values. That being said, it's looking like potash inventories are going to be pretty well wiped out by the end of this season. And so bins are starting to empty out in a lot of places. We did see regional supply outages in the Corn Belt, especially at river warehouses this spring. What's wild is you think about it. So here we are in early May. If you go back 2 years ago to 2020, we had already had our potash fill program by this point in the year. If you remember, that was the year that Belarus pulled a dissident journalist from a plane, and then Mosaic's K1 and K2 mines flooded all within a month. And so that potash fill value from 2020 looked excellent when you saw the price surge that happened all the way up through that fall season. And so, long way of saying that it's hard to say that we'll see a potash fill program nearly as early this year, given the fact that spring applications are still going on, given the fact that inventories are getting depleted. It's tough to imagine that you'll see a spring or a summer fill program anytime soon here. So even with potash prices rising, the overall value of potash relative to the price of corn looks pretty good. Here's the barter rate. And with US prices surging over the last month, the US has returned to a premium over Brazil. This is pretty unusual. And if you look at where we were a year ago, Brazil was at a huge premium to the US at the time. So what a change in times and change in pricing over a 1 year period. So that's again all I have. Thanks for tuning in. Looking forward to catching up next month. May you all have a great month of field applications and planting ahead. Thanks so much.